I had some musings late last night and I thought I'd jot them down, and I'd love to hear your comments on these. I mean, these are tense, kind of random, they kind of fit together. Anyway, let me start out here. Number one, Shanghai will sell very close to the maximum output of 1 million units this year. Could even be 1.1 millions, but they will hit pretty darn close to the maximum output. This that has a very high likelihood. As things go and you measure things, it's very, very likely. Why is that? Well, because they got the Model 3 refresh, and that's doing very well internationally. They will have, they're opening up new export markets, like, for instance, recently was Chile. Prices will be firm, COGS will drop, the cost of goods sold will drop in Shanghai. The factory gets more and more efficient. Just saw a headline this morning that said that the battery materials decline in costs is not over, that those are going to continue to decline. Everything is looking really, really good for Shanghai. So yes, the China economy is the one negative there, and yet they're talking about a 5% increase in overall GDP for next year. Is that a reality? I don't know, but China's a problem. I don't think Shanghai is going to suffer because it's at max already. That's the key. The key to that one, Shanghai's at max. Number two, Fremont will sell out the rest of the year also. Okay. It only does it's the largest auto factory in the United States and second largest in the world, I think, at this point. But they're only going to do 650,000, 600,000, 650,000. It's not going to be make or break for the overall totals for this year. They will make about as many as they can make. They are apparently having trouble getting that line going for the new Model 3, but that will be solved, one day. Maybe it's already been solved and we just haven't heard about it yet. They will sell pretty much all they can sell. All right. And the cost of goods is going to drop there too. And I don't see that there's going to be any real reason to drop prices in the United States on Model 3 or on Model Y, S, or X, in order to keep that plant going at 100%. Austin will produce at least 250,000 Model Ys and 75,000 Cybertrucks this year. We'll call it that. You know, that's 325,000 total. And if you add those three up, that's already 1.975. You're almost at 2 million just from those three. If you're off a little bit, maybe you're at 1.9. If you're a little higher, maybe you're at 2. It's not going to be that hard to get to 2 million. Then you got Berlin. So Berlin is saying they're producing 6,000 right now a week. So that should be at least 300,000 for the year. Then now you're at 2.275, 2.3, maybe you're only at 2.15. I don't know, but it's going to be better than what the street is saying. I have a hard time seeing where it ends up less than 300,000 in Berlin. And that's for this year. Okay. Now, Model Y sales this is number 5, might be getting Osborne by the Cybertruck, but only in the US, all right? Because the Cybertruck's only in the US. So there might be an Osborne effect. I started thinking about this yesterday. We're going to get rid of our Model Y when we get our Cybertruck. There could be people that would normally be a customer for the Model Y, which are not, because they want to get a Cybertruck, and they're at a number where they think they're going to get it in the next 12 months or so. So they're not getting a Model Y, and they would otherwise be a customer. Number 6, Model Y might also be Osborne a little bit by the Model 3 Plus because it's such a great car. And there's people that are like, well, the Model 3 Plus has got some bennies that you can't get in the Model Y. And so there's might be some people that are going that direction. And the Model 3 Plus, unfortunately, right now is not producing like it should out of Fremont. But worldwide, there could be people that are buying Model 3 Pluses instead of the Model Y. Number 7, both of those things can be overcome if advertising gets the word out about the incredible value in a Y. That would be my solution right now. Advertise, advertise, advertise has become my solution. Price cutting is done about all it's going to do. I don't think you can get a ton more out of price cutting. Number 8, some argue that consumers are now trained to by Tesla. They're trained by Tesla to wait for deals. This could be hurting a bit. So if we stabilize price and spend some money on advertising, I think that's, again, a wiser move at this time. It's not a matter of agreeing with Gary Black with regard to his year-long tirade on this. I think that the prices did need to come down last year, partially because the massive increases from the prior year were caused by all these, inventory nuttiness over supply chain issues and whatnot. All right, number 9. Full self-driving is not a lure right now. It has been in the past. People have been buying the cars just to get FSD. They wanted FSD either because they just wanted it, and they wanted to be able to drive with FSD, or even though they knew it wasn't 100% ready to go, but they would be soon, or they wanted it because they wanted to make money off of putting their car out on the robotaxi fleet. So that lure has gone away. And I think the buyer today is not going, oh yeah, that's what I want to do. I want to get that. No, that's not happening right now. But once FSD is complete, and that could be any day, it could be next month, it could be 2 months, or it looks like it's on the verge, then I think that alone will cause auto sales to pick up as people go back into that mood and that mode of saying, oh, I can just sit back and read my comic books while I'm driving my car, or I can put my car out and make money on it. Then that lure will be back there again. It'll be another reason to buy a Tesla vehicle. And it's going to be a big reason, and it's going to have a huge impact going forward once that is solved. We forget that. That's something that the market has forgotten. I think the analysts have forgotten it. I had forgotten it. It just occurred to me yesterday. 10. So basically, Tesla will do just fine on the sexy lineup this year, beating the street's estimates. Energy and services will add nice profits that the street is not expecting, doesn't understand, hasn't gotten yet. 2025 is going to be even better, and then 2026 will just be nuts, as you've heard me talk about ad infinitum now. Anyway, there might be some other stocks that will do better in the next month or 3 months or 2 years. And, Bitcoin might do better. That's a lot of people right now, I think, are shifting money out of Tesla into Bitcoin, shifting money into gold, shifting money into NVIDIA, into Microsoft. These are, come on, it's not stupid. It's not dumb. I'm not saying anybody that's done that is wrong. They've made money. If they did it a couple of months ago, they've been the smart ones. But long term, there is nothing. There's nothing out there that has a higher upside potential than Tesla by a lot. I need to hear your comments on that list. What did you think? I'm really excited and interested to hear. This is Randy Kirk. Please also hit like and subscribe. Have I told you how much I appreciate you recently? This channel has grown like crazy in just 14 months. Who knew that I'd have this new career at this stage of life? But hey, I'm enjoying it. If you're enjoying it, thank you very much. And if you haven't ever subscribed, do you know how much that helps? My subscriptions were going crazy last month, and over the first few days of March, they're down a little bit. So time to get those subscriptions going again. And of course, love to have you join Patreon and buy some of those Cybertruck bottle openers. Come on, you need this. You need to get one of those, or 2 of those, or 10 of those for your friends and for birthday gifts. And Father's Day is coming. All right. Anyway, it's really a long way, isn't it? Okay. I know I'm stretching it a bit. The Street reports this morning that Goldman Sachs analyst Mark Delaney is affirming, sounds like me this morning, he's affirming his $220 Tesla price target in a client note published Tuesday. He argues that a strategic approach to EV pricing could provide support for the group's near-term profits, given what he sees as a sustained EV demand in the U.S. and elsewhere. Goldlight highlights a key election risk. Our analysts suggest that Tesla and Rivian should be targeted on additional price reductions in the U.S. that are faster than cost of goods going down, with the Model 3Y already affordable to many U.S. consumers, and Rivian generally selling to a less price-sensitive consumer at a $70,000 price point, Delaney and his team wrote Tuesday. While our analyst shows that a 1% price reduction generally correlates to a low single-digit increase in volume in the mainstream part of the market, we estimate that incremental broad-based price cuts to Model 3 and Y would be negative to profit dollars, at least in the short term. What did I just say? They must have been, they read my mind. I think it's time. The price cutting needs to be over. It's time to work on other directions. All right, Gary Black. Speaking of Gary Black, he says this morning, China insured registrations were 12,500 for the week of February 26th, March 3rd. Who was that guy yesterday that said that there were going to be a 20,000? Where did he get his information? Okay, 12,500, which is a good week. Year to date, Tesla China is at plus 8.7% year over year. First quarter is down 26, however, versus fourth quarter. To beat 2023 first quarter, Tesla China needs to average 15,000 per week the last 4 weeks of the quarter. Now, remember, it's possible that Tesla will miss in China consumer deliveries and yet still keep that factory humming full out because of exports. So you don't have to always beat China month over month, quarter over quarter. You don't always have to be going up there, especially when that factory is maxed out. That was part of what I was talking about in the information above. All right. Umbaism says this morning over on X, Tesla is the reason for the deep red. I'm sorry, Tesla. Oh, he says, is this the reason for the deep red in the pre-market? Well, if it is short-lived for sure. He talks about the European gigafactory near Berlin halted production and was left without power after what CEO Elon Musk called an extremely dumb suspected arson attack that set an electricity pylon ablaze close to the plant early on Tuesday. The blaze southeast of the German capital, which did not spread to the Tesla site, the U.S. electric vehicle maker's first manufacturing in Europe, was extinguished by a fire brigade, police said. And this was Barron's headline. So if all you are is you're a headline surfer and you're just looking at headlines and you don't open and take a look at the article, this is what you read this morning from Barron's. Tesla stock is falling as factory halts production. Tesla stock is falling as factory halts production. Does that, nothing about terrorism, nothing about a fire. No, it sounds like they're halting production. Like, oh, sales are down, so we're going to halt production again. It's malpractice or it's malfeasance. It's horrible. Anyway, they also mentioned that EV rival NIO is also having problems in terms of their numbers. Their numbers were not great. Their guidance was not great. This is also true for Li. So the overall China picture is not great. I said that above. China's not doing great, but I don't think it's going to affect the China factories' sales numbers this year. I think they're going to sell out. All right. So in other Elon Musk news, 3 Falcon 9s lifted off and completed their flights within 20 hours. What a world we live in with Elon Musk changing the planet. Of course, one of those Falcon 9s was eventually taking astronauts up to the International Space Station. It docked successfully. Everything went perfectly. Just amazing. Absolutely incredible. All right. From the Kobasi letter this morning, this is very interesting news. Gold breaks above 2150, pushing into record high territory, and is now up 65% since 2019, while the rest of the commodity market is going. What is it about gold right now? I mean, the inflation story is over. Is it because of the U.S. debt? What in the world is going on with gold? Despite rate cuts being removed from forecasts and a strong U.S. dollar, gold continues to push higher. And meanwhile, Truflation is sitting here with a record low over the last 2-3 years, 1.59% now. That's the lowest it's been, again, since they made the change. Your mind might go back, if you watch my channel all the time, that Truflation was showing around 1.33 earlier back in the end of last year, but then they made these massive changes which upped it over half a point. So now, but it's back down under 1.6 now. So that's continue on. Wall Street Journal this morning says, now we said we were going to look at Target and Walmart this year. I mean, this week, we want to take a look at Target and Walmart, and not Walmart, Target and Costco this week, whose earnings were coming out. Target, not as much, just kind of to take a look at the overall economy. But we want to look at Costco because it's a slightly different customer, interested to see how they did. Anyway, Target's annual revenue declined for the first time in 7 years as the retailer struggled to entice shoppers to splurge on discretionary items like home goods and electronics. As we've been saying over and over again, it's about those kind of items, discretionary items and more expensive items, durables, is where the consumer's not spending money right now. The company's been battling the effects of weaker traffic to its stores and shoppers spending a bigger chunk of their budget on food and other essentials. On Tuesday, it said revenue in the year ended February 3 was 107.4, down 1.6 from the previous year. They earn most of their sales from non-food items, in contrast to competitors such as Walmart, the country's largest grocer. While inflation is cooling, especially in some non-food categories, it has been 30 years since food costs have accounted for such a high percentage of American spending. Well, that's a very important statement there. 30 years since food has accounted for such a high percentage of Americans' total budget, according to government figures. Very important. This is also important. Target has also dealt with its own missteps. The retailer angered shoppers over certain products being sold for Pride Month, and its response to the blowback was not good, further hurting their revenues. I'm 100% positive that is continuing to hit Target. I can tell you for sure. Markets now. Let's see where we are as we've got Tesla down 2.82%, or $5.30 at 183. That's about where it was pre-market. It pretty much hasn't changed. It was moving up a little bit, is moving back down at this exact moment. But part of this is due to the overall market being down. The Dow is down 200, NASDAQ down 183, S&P down 27. The Magnificent Seven, except for NVIDIA, all down. Apple down big this morning because of primarily because of China numbers not doing well. Apple will be affected more by the China numbers than Tesla would be, because it's a consumer item that is, what do you want to call it? Repurchased. And if it doesn't get repurchased, then their numbers will go down. Google down, Amazon down, all of them. Meta down big, Microsoft down really big, down 2%. NVIDIA up slightly, $1.68. And then we've got the Cathie Woods all down except for one, basically call it all down. So the market is definitely not having a very, very happy morning. Let's take a look. However, I think the money is going into bonds right now. The 10-year is down 6 basis points, 5.9, but call it 6 basis points. The rest of the long terms are also down, but the 2-year only down 2.7 basis points, opening up that inversion. Also, the very short-term ones, like the 2-month, only down 0.6 basis points. So the inversion again widening. Hard to understand it. And now with the gold thing happening also, we have oil up 2 cents, sitting at 78.76. Some noise this morning, a little bit of noise about production in the U.S. not increasing as much as last year, but still increasing. So oil now sitting at unchanged. Natural gas unchanged. We've got the dollar unchanged. Everything's unchanged this morning, except, of course, for the market, the equities. Gold is up another 10, sitting at 2,137. Up 0.5% this morning, but way up yesterday. Huge up. We were under 2,100 yesterday, and now we're at 2,136. We got copper down a little bit this morning, but just a very, very, very small amount. And then we have got Bitcoin moving strongly up again, 1,200 up this morning at 68.8. 68,857. So there you have what is a very interesting market right now, with most of the news ahead of us. You want to join? So Brian White will be on later today with me once again. Brian and I are going to talk a lot about BYD. You do need, it's time now. You haven't cared. I know y'all have, most of you have not cared about the competition. BYD is real competition to Tesla. Yes, she claims that it's only a 15% overlap between the two companies, but it's still competition. It does matter, but we'll talk about where it matters or why it matters. We'll talk about the company as a whole. Brian knows this company backwards, forwards, inside out. He's seen the vehicles, sat in the vehicles. So you're going to want to hear from Brian. That'll be later this morning. And then, of course, we've got Nicholas Gibbs on helping me to do Good News Tuesday. And we'll find good news. In fact, what do you think? Do you think the market is going to stay down all day today, or do you think at some point the bottom scrapers will come in, the bargain hunters will come in? I mean, everything's on sale this morning except for bonds. Bonds are doing well this morning. And then definitely yesterday, Brian White and I talked about the reasons for Tesla and the market being down right now, but mostly about why Tesla's down right now. Quite a number of things that are impacting. It's kind of a perfect storm right now. And that was our show yesterday. I'm going to put a card right here. You want to go back, you probably want to go back and check that out. All right, I think, let's take one last gander over at Tesla this morning and see if it's still sitting there around down 5. Nope, only down 4.21 now. So that is better. I never told you the percentages. The percentages are Dow is down 0.32, NASDAQ is down almost a full percent, S&P down 0.39, and Tesla down 2.19. That is now pretty much in line with its normal amount that it would be down compared to the NASDAQ. So it seems like Tesla this morning is more reacting to the overall drop in equity prices. Yesterday, not so much. That was the perfect storm, was yesterday, continuing to some extent this morning. All right, that's all I got for you right now. Look forward to seeing you a couple more times today, and it's been great talking to you.